The dollar is rapidly moving into bubble territory, but that doesn't mean that the rally is going to end quite yet. I suspect that the focus on a possible rate hike in the United States this year, as well as the prospect of quantitative easing from the ECB and concerns over Greece, and later in the year concerns over Spain, could continue to support momentum behind the dollar. This is really an ugly contest between the developed market currencies. The backdrop here is that because quantitative easing and other types of easy monetary policies have driven bond yields to incredibly low levels, the advantage of being in bonds rather than currencies has really been eroded to almost nothing. And so many investors are really focusing more on currency markets than other markets now, because you have much more liquidity. The markets tend to be very herd-driven, very focused on particular stories that gain great credence, and then large numbers of investors pile into this trade. And so there is this tendency essentially for the asylum to be run by the lunatics, meaning that currency markets are driving most other markets in the world today. This is likely to continue, I think, until the one particular missing ingredient in global currency markets makes a reappearance, namely inflation. I think inflation is going to resurface soonest in the United States, probably in late 2016. And by that time, I think investors will be limit long dollars, just at a moment when we're going to see that actually inflation is going to become a bit of a problem in the United States, and therefore a problem for the dollar. But for 2015, the dollar looks pretty well supported. Well, of course, there is a tendency in the market to treat all emerging markets as if they're one big amorphous mass, which is, bordering on the insane, because emerging market there are now 62 countries in the emerging market bond indices. That's an enormous variety of countries, and many of these countries are dramatically differently impacted by a fall in oil prices. The majority of emerging market countries benefit from this dramatically because they're oil importers. It reduces their inflation, it improves their balance of payments, it increases real income, and it supports consumption. And that is exactly the impact it is having in India. India is one of the major beneficiaries of lower oil prices. So as far as India is concerned, may they fall further.